Is India no longer the darling of foreign investors? At least the newspaper headlines scream so. There's a lot of evidence which is pointing to this fact. But how true is it, or how far from truth is it? Let's slug it out with my panel today, Ashish Chauhan, MD and CEO of Bombay Stock Exchange, and Ashish Singh, Chairman, Bain Company. Gentlemen, thank you very much for joining us. I'm going to start with you, Ashish. You've been in the business. You can feel the pulse of the foreign investors. First off, it's not so easy to get in foreign money into the stock markets. There has been a despondency which has been setting in for the last 2 years or so after that initial euphoria post-subprime crisis.
Actually, I think the topic itself seems to have made up the mind saying FIIs are not coming into India, which is not correct. Till yesterday, we got $20 billion, okay? This is practically, we might, if the trend continues, we might be probably looking at the comparable numbers to the highest ever FIIs FII money we received.
In 2012?
Yeah, so $20 billion in 2012 is practically one of the largest FII investments in India ever. Total investment in India, if you see, by FIIs over a period, it's probably in the range of $120 billion plus minus, say 5–10%. But $20 billion on that scale, and also the scale of the total market capitalization, which is in the range of $1.2–1.4 trillion. It's pretty significant. And so my understanding is always, it sort of, sometimes we are too...
Either we are very exuberant or we are very despondent and very low.
And we don't look at the facts. Basically, we make up the questions and we start answering, sort of arguing sort of in favor of those, we look at the statistics which favor only our arguments rather than actual facts, right?
So it's a question of glass half full or half empty, Ashish Singh. But tell me, is this money which is likely to stay? Because there have been a lot of FII money is still considered to be the shorter term money. Sure. There is FDI also which we have to look at, and the figures there aren't encouraging at all for 2012.
Sure. I agree. I think last year we had a very good year in terms of FDI. But again, I look at it in two ways. You know, one is what have we done versus where we were a few years ago. We've done okay. This year has been a little bit of a down dip because of what's going on around the world. But more importantly, we should look at where we could have been had we done things right. And my argument there is going to be that we are far below what our full potential is. We may be the 4th largest FDI destination in the world, but why are we not the 2nd largest destination in the world? And we can easily be. We have the potential to be that. And when I talk to my clients overseas, when I look at other companies overseas, they're confused about India today. You know, ultimately, they are asking us, do you want our money? If you want, business looks for certainty. And China provides them that certainty, for example, or has provided them that certainty historically. India, especially in the last 1 year, 1.5 years, the whole business environment has become uncertain for FDI. And when you're putting FDI, you're making a long-term commitment, long-term bet to a market. This is not like FII money that this can go away.
Right.
And so companies need to be sure what they are entering into. And with the Vodafone case right now, with retrospective taxation, with the spectrum license cancellations, with a lot of go, no-go policies around coal and projects being put on hold, I don't think a lot of foreign investors are clear as to what do we want.
For the first time, I actually heard from an international banker who turned around and he said, you know, I would have never entered Russia as a geography because I was just never sure when the government is going to do a complete volte-face. And I'm beginning to get the same sense about India as well. I'm just not sure.
Which is unfortunate because, you know, one of our key strengths versus some of the other countries where money was going was our institutional strength. And the fact that we had a legislature, we had a democracy, there was an avenue in terms of judiciary and a recourse. And I think what's been called into question is the strength of those institutions over the last 1.5 years versus places where people went in knowing that there are no institutions and they prepared themselves accordingly. They did not do that for India. And so now they're looking back and saying, what else should we have done?
With a democracy and a liberal democracy like ours, I think, Ashish Chauhan, the expectations were a little different. But let's come down to even the stock markets, which pretty much give you a sense of what investors are thinking. Even the FII money that we're talking about, 20 billion, am I wrong in believing that that's coming in simply because of the quantitative easing which is happening internationally? It isn't necessarily driven by the fundamentals which are perceived for India as of today.
I would rather give a lot of credit to all of us. that $20 billion is not a small chunk, and people coming from outside have a lot of avenues to invest elsewhere. And so the way I look at it is, as Singh said, basically the FDI is a slightly longer term decision making. The first to come in would be the FIIs, because that's easier to move in. And so the way I look at it is, people are looking at us very seriously in terms of investing, and quantitative easing could have even helped other countries, but we are getting a very large share of that. And if we were not so attractive,
but we were also probably one of the worst performing markets in the period prior to these 6 months amongst the emerging markets.
Now,
so therefore the bounce back has also been that dramatic, Ashish.
But it did not have been, right? So for me, once people get confidence that you are now on the right path, the smart money starts moving very early.
Okay.
And for me, smart moving is now betting on India. So especially what was happening, if you look at internationally, US was going through a very hard-fought election, which fortunately got over. China is going through a sort of another transition. For me, although China may give you a sense of comfort or sense of certainty, it's what we call event risk in our parlance, that if things can go wrong, then they can go very drastically wrong there. In India, the margin is very little. If you say it's wrong,
I think in India things are more evident, Ashish Singh. Would you agree with Ashish here that, at least it's a known devil, even with all the flip-flops that we've had on the policy front, especially the retrograde tax bit that everybody's been very concerned about. It's still a democracy, and therefore you do know what's going on.
Sure. No, I think the level of transparency in India is greater, and corporates, again, along with certainty, also value transparency. And so to that extent, I agree with what Ashish has said, that yes, there are event risk issues in China which don't exist in India. Although I would argue that we are coming close to that, given the years, what has happened in the last year or so. But I do also feel like money is coming into India today, and our level of foreign holdings is the highest ever in terms of in our history. But this money is betting on India. I think what Ashish said is exactly right. It's betting on India. It's betting on what has happened in the last 3-4 months is actually going to translate into action over time. Because if it doesn't, then what is going to get hit here are corporate earnings. Because the way we are looking at growth and we are looking at input costs all my clients are facing input cost issues.
Yes,
and so if earnings do not keep up with this expectation that has been created because of implementation not happening, then this money is equally likely to head out as quickly as it's come in again. So I think I agree that there's a window that's opened up for this money to be betting on India. We got to demonstrate and deliver against that bet.
Place India vis-a-vis the other countries that you're competing with in the BRICS basket, in the other emerging economies, Ashish. If we're going to be competing for this foreign money vis-a-vis many, many others, and when it comes to FDI, yes, FII windows are much faster to open, but when it comes to FDI, we are very poorly ranked.
No, the way I look at it is, FII money has started coming in. As you said, the policy sort of is now also moving forward, and so when the FDI comes in, it comes in at a lag, because the decisions are being made now to invest. They'll start kind of pouring in at some point in time in future. And for me, basically for us, what is required, as he also pointed out, employment, demographics, the right area to focus on is what I call skilling. And basically we need to focus on that more, to sort of also ensure that the skills which people actually acquire today requires to be upgraded, enhanced, relearned, unlearned, and so on and so forth. And so we need what I call a skill enhancement framework. But overall, what has happened in last 20 years, I'm pretty hopeful because of the fact that we have created the right focus on entrepreneurial framework, on skill development, and using skills to achieve your entrepreneurial goals. So I think India is pretty much well poised.
So you're saying the story is intact and FDI money will flow in. India hasn't stopped being the darling of foreign investors. Place India amongst the rest of the economies, because you've got a global perspective as well.
Sure.
I mean, how do they perceive us today?
The fundamentals, again, I go back to what Ashish. Long term, India is attractive. Long term, you cannot ignore markets like India, because where are you going to go and invest money? In populations that are growing. Fundamentally, it's India, China, and Southeast Asia and Africa. So all companies are looking at these markets as future growth markets. Relative to some of the other markets, India is still better off. When we look at China, for example, today, they are at a transition. There are issues with the economy. Companies have been there for the last 20 years, are now realizing the cost of doing business in China. So they're looking at alternatives. And I think so if we take some steps right, continue along the path that now seems to have been reinitiated, and accelerate that, do some more things like GST needs to come out.
Yeah.
The agenda of the government is exactly right. It has been right for the last 5-6 years. All the right things are on the agenda. The issue is implementation.
So I think we're going to leave this discussion on a very positive note that, well, maybe not the darling of foreign investors, but it's still very high on the radar of foreign investors. And if we continue to implement and push through the reform agenda, we'll continue to attract foreign capital. Ashish Singh, Ashish Chauhan, pleasure, gentlemen, having you on this panel.
Thanks, man. Appreciate it.
India's #1 news app just got even better. Download NDTV's new app. Fully optimized for retina display. Full screen view. Faster response time. And Sudoku. NDTV's new iPad app. Download now.